In today's price action, it is immensely important for me to emphasize that the U-turn that we have seen for the European equity indices, and also it is having an impact on the US futures as well. Now, what do I mean by that? Now, as always, I start my day at 5:30 a.m. watching what is happening over in Asia. At the time, the European markets, or the futures for the European markets, were immensely down. We were seeing for the Dow to open well over 1% lower, but the moment that the cash market began to open, we saw a completely change in sentiment. Now, why that sentiment has changed? Obviously, there is not very much clarity because the fundamentals which drove the US markets lower are still very much intact, are still very much in place. I think investors have just began to think, they just think that, okay, it is an opportunity for them and let's start bagging some bargains. The reason that I'm saying, as you can see in the chart, the DAX index, specifically the DAX futures index, bounced off its 100-week moving average. Now today's low, it couldn't break the 100-week moving average, and I think it is that particular element that really triggered that the thinking of fear of missing out, and of course investors started to buy the equity market. But having said this, the Dow Jones futures and the S&P 500 futures are still pointing for a negative open for the US cash market. Now, historically speaking, with the kind of a sell-off that we've experienced yesterday, about 30 to 40% of the time, the market tends to recover some of its losses in the following next days. So let's see if that is what we are going to see, or if the market is really going to take the other side and the plunge will continue. Now, in terms of commodity market, gold prices were just a little shy of that 1800 mark that we have talked about several times. The price made a high of 1779. But there are 5 major factors that are still providing sufficient support for the gold prices to continue their journey to the upside. Now, of course, if you want to learn more about those ones, you want to read more, go onto our website, and there will be a full report for those 5 factors that are likely to push the gold prices higher. But going back to the equity market space, what we are really concerned about is that the Q2 has pretty much come to an end because it ends at the end of this month, and another quarterly earnings season is going to begin by next month, but in less than 10 days or so. And what we are looking right now, 2 factors. Firstly, the coronavirus, the first wave wasn't properly controlled over in the United States, but secondly, there are clear evidence now that the second wave has started to surface in several different areas of the world. I'm not speaking of China, I'm also talking about Australia, and it is highly likely for the second wave to emerge over in the United Kingdom as well, as we come out of this lockdown phase starting from July, when the restaurants and pubs will be open. So obviously that is going to have an impact of something what we have seen over in the US with respect to the Apple closing in stores in hotspots. Are we going to see the repeat of that in various different pockets of the world, and how that is really going to impact the global growth, and more importantly, its influence on corporate earnings? Because remember, at the beginning of the second quarter, we were a lot more optimistic that when the economy begins to reopen, we are going to see a lot more better future forecasts. But I think that is highly likely to be influenced by this second wave which has started to emerge. That's all for today. See you guys tomorrow.